and welcome to the Payment Association's first interview for our new podcast series entitled Making Cross-Border Payments Work for All. My name is Josh Burl and I am a member of the Payments Association's Project Inclusion team, and we're speaking to organisations all over the world on how to make cross-border payments more inclusive. It's great to be joined by Gabe Ruhan, the Chief Executive of Paycode, and I hope you enjoy what he's got to say.
Hello everyone, my name is Josh Burl. I'm Chair of Project Inclusion at the Payments Association, and we are privileged to have Gabe Ruhan, the CEO of Paycode, to talk to today. And the subject we are addressing is cross-border and financial inclusion, which we know Paycode has a big presence in, but I don't want to put words into Gabe's mouth. So Gabe, could you tell us about yourself and about your organisation and what it does?
Yeah, so hi Josh, my name is Gabe Ruhan, and I've been the CEO of Paycode for a few years. I came from a technology background. I was in technology infrastructure, founded a data center business called Global Switch many years ago, and then moved into hosting and software development. And I guess it was that I lived through that age of the Internet of Information and data centers, and it always fascinated me, the idea of the Internet of Value and what that could mean. So I've always had an interest in what digital currencies we're going to do. So that's kind of my background and my perspective on things.
Excellent. So tell us a little bit about Paycode.
So Paycode, we're a smart card-based switching and settlement system, and we're squarely aimed at reaching the unbanked and underserved segments of a population. We specifically target sort of rural and semi-rural areas where other forms of electronic payment don't function at a level that instills the trust that's required in the users of that solution. So people move to a digital solution of payment and then find perhaps only once or twice that it doesn't work for some reason, then they revert back to cash. So we've developed a system that is able to reach those people, allow them to transact 24/7, 7 days a week without any interruption. And we do that using sort of state-of-the-art biometrics and other clever things that I'm sure we'll get into in this discussion.
Could you give us an example of how it looks and feels? So if I were using Paycode at the moment, how would that work? And you know, I know you've got some big name clients, particularly across the African continent, and it would be interesting if you could sort of thread those in to how you respond to that question.
Yeah, so everything for us centers around a biometric smart card. We go into the field. I guess maybe let me start with a perspective on what we see as the obstacles, and then that'll probably lead into how we address those issues. So the first obstacle to financial inclusion in our view is simply one of identity. I think it's 1 billion people that don't have sort of the standard identity documents that we've grown to expect in the financial world. So we need a passport, we need a driving license, we need a birth certificate, we need a utility bill. And for 1 billion people around the world, those things just don't exist. So our solution is to try and capture the biometric identity of that person as a first stage in financial inclusion. So what it means is we can be sure that there's nobody else in the database calling themselves Josh who has these biometrics. So it's like the first rung of the ladder, if you like. So we've got no reference data with which to measure that against, but we believe that you shouldn't be permanently excluded for that reason. We can come up with tiered levels of KYC, and we can do all sorts of clever things. But first of all, we need to give you some form of identity. So Paycode's developed the technology to be able to go out into the field with our tablet devices, go to the community, capture biometrics, capture whatever KYC information there is, capture facial images, all of those sorts of things. And we write those to a smart card, which we instantly issue to you. The second sort of obstacle to financial inclusion is purely one of cost. People can't afford, we've become accustomed, I guess, in developed markets to the cost of a bank account not being very visible to us. It's kind of, the cost of it is hidden amongst all the other products that we might be getting from the bank, but it's still not unusual in emerging markets to see a cost of, $7, $8, $10 a month for a bank account. And that's simply unaffordable for that target market that we're talking about in the last mile. So as well as giving somebody that first step on their identity ladder, in that process, we also open a digital bank account on our back-end server. And by that, I mean a simple sort of transactional bank account that's able to do the day-to-day banking, make payments, receive payments. There's even a kind of a form of a standing order in there, which is doesn't work quite the same way. But the idea is to give somebody a low-cost bank account that will suffice for their day-to-day transactions. So we've given them an identity, we've given them a very low-cost means of transacting and doing business. And the final obstacle, and I think it's still quite a big one, and we describe ourselves as true financial inclusion because I sometimes feel that people don't realize the number of people that just don't have access to the mobile wallets and the other things that we think about as financial inclusion. So the issue of connectivity is quite a big one in emerging markets. I think the last statistics I saw estimated that 3.7 billion people don't have access to a network, either because there's no coverage in their area or because they don't have a device that's capable of accessing that coverage. So what we've done is we've taken the value that you hold in your bank account and we bring that, a digital representation of that, down to the smart card level. So there's a minimum of one wallet. There can be multiple wallets on there, but there's at least one wallet on that card, which is a digital representation of your value. From there, we have a point of sale device that has within it what we call a trusted electronic environment. So there's effectively another SIM card in there. So when the customer card comes into that point of sale, the transaction actually takes place between those two SIM cards with no reference at all to the back-end system at that stage. So it doesn't matter that that point of sale device might be offline at the time. If you contrast that with what you guys at MasterCard do, seeking an authorization code and moving between the banks, and that if there's any problem with connectivity, that system simply doesn't work. So our point of sale device only requires sporadic connectivity. So we can settle that point of sale device once every 24 hours typically, but we're also doing other things in the meantime. So any transactions on that point of sale device are also dropped onto your card. Obviously you can't see them and you can't access them. You don't really know that they're there, but they're carried by your card, maybe into another point of sale device. And maybe that point of sale device happens to be online. And it's a way of spreading those transactions throughout the network. And at some point over 24 hours, those transactions are all settled. And in the case of Ghana, the GIPS system, which is our biggest implementation to date, we operate at real-time gross settlement, and we instruct all the banks at midnight where to move all of those funds. So we're dealing with a digital representation of the value, and we move that around our ecosystem because it's easier to deal with it that way. And then at the end of day settlement, we instruct the bank to say, here's where the real money needs to go. This is where it needs to show. So that's in essence what we do. We're addressing identity, we're addressing cost, and we're addressing the problem of connectivity.
Thank you, Gabe. I mean, that was a fantastically clear and structured explanation of what you do. And so I understand that you're almost like a bubble that can exist separate to the broader sort of real-time ecosystem. But as long as you say there's a reconciliation at some point, then you're trusted, as it were, to be able to advise banks on where to shift money subsequently at the end of the day, if my understanding is correct.
Yeah, that's absolutely right. So
Right.
we deal with that, the bits and bytes, almost like a digital currency. In fact, I was saying to somebody the other day, we're like a CBDC. We've been creating our own digital currency for many, many years and dealing with that. So the advent of central bank digital currencies means instead of me taking real fiat money and locking it away in, we work with banks, so there's always a bank involved in our solution. So instead of accepting real money from a donor organization, a World Food Program or somebody like that, we would take that money, lock it away in a bank account and create e-value to the same value as that. So for me, a central bank digital currency is we skip that step and you create the real value, and then it gets dealt with around our system in the same way as our current electronic value is dealt with.
So could you give us some examples of how your system is being deployed, particularly within emerging and developing markets, and the way in particular that it enables the last mile of electronic payments, essentially, of those areas where you simply don't have the sort of centralized infrastructure that the rest of us in the developed world benefit from?
So our sort of heritage has been around social grant distribution. So we work for World Food Program and United Nations and people like that in digitizing a flow of funds into an area for whatever reason. So we take funds from them. First of all, we're quite often provided with a sort of database of people that are being targeted, and we can repopulate our software, if you like. And then we go out into the community, and we would typically use local students. We train them on the operation of our software on the tablet. We've developed a tablet, and there's a slot in the top of the tablet. We're able to put a blank bank card in there. We capture all of the biometric information. We capture whatever KYC information the system owner wants us to capture. And then when that card comes out of the tablet, it is a live working system. So, it takes 5 to 7 minutes to onboard somebody like that. We did a project recently in very rural Zambia, and we onboarded 200,000 farmers in, I think, about 6 weeks. But it's clearly a function of how many students and how many tablets that you want to address. So once everybody's received their card, then there's a payment distribution system, much like you would have if you were doing wages on behalf of a corporation. So we're able to receive a file that says, here's the money that we want to send to this particular named individual. So having received, once those funds hit our account, we create the digital representation of that value, and we send it down to that card. And there's a couple of ways that we can do that. We have developed a way of crediting that card even when it's offline. So we create a 10-digit code, and that's really a cryptographic block. It's the first 10 digits that represent both information about your identity as well as the amount of money that you're going to receive in this payment. And you can receive that code in lots of different ways. You can receive it as a text, you can receive it on a voucher. There's a famous case of a project we did in Malawi a number of years ago. We were paying teachers in remote locations, and we were publishing those 10-digit codes in the newspaper. So you would go to find your 10-digit code, you would attend a point of sale device, and you would punch in your 10-digit code. And as long as you're able to verify your identity by providing, there's a window on the point of sale device, and you're asked to provide a fingerprint to prove that it's you. And if you're able to do that, and it's the fingerprint that that the deposit is expecting, then that value will be transferred into your wallet, and you go about your day spending your money, even though that point of sale device isn't online at that time. If it is online and you put your card in, the card will say, hold on a second, I've got some value here for you and I can download that value. Or, another method that's sometimes used in social grant distribution is we're able to put those 10-digit cards onto a little SIM card or a little storage media, and send that out physically to the point of sale device, and people can come along and get their social grants in that way. So that's typically where we've come from. Increasingly, we're working more with what I would describe as second-tier banks. So we think the key to unlocking financial inclusion is to be able to bring that the technology like Paycodes, that smart card technology, down to those smaller banks. I'll give you an example. We've just signed a customer in Ghana, and they've got, I think, about 600,000 members of a savings and loans bank. So we're part of their digitization strategy to say, well, we're a rural bank and we need this community to be able to work offline. We're going to be able to give them a card that allows them to access their funds remotely, to be able to spend and to be able to do a whole range of other things that they probably couldn't afford to do. They certainly couldn't afford to have, one of the big schemes as a card. They just don't have the depth and the budget, frankly, to be able to put in a scheme like that. So we're able to come along and do that cost effectively. In that case, the onboarding devices are in the branches of the bank, and they onboard and digitize their customers as they see fit, and as those customers come into the branch. So that can be right down to a small savings organization, right up to a sort of mid-tier bank that's focused very much on capturing those people that they can't normally reach in that last mile community.
And what sort of effort do you need to put in terms of acceptance, so that holders of the card can use it in their local communities, whether online or offline?
Yeah, so quite often, our system requires our standard point of sale device. So there is a requirement for us to roll those out, and it's normally part of, digitizing a flow of money from we might have a paid for entry into a market working with a donor organization, but from there we can branch out and bring more FSPs onto the system. What we're trying to do is create an ecosystem. So we always have at least one bank holding the real money, because we're a software company. But then the idea is to add more banks, more micro lenders, more mobile money platforms, more insurance companies, all using the same sorts of rails that we've created in order to sell their product and deliver their product. So it's quite often a paid for entry that we then land and expand and roll out more point of sale devices and add other projects. So that's typically how it would work. But
no, okay, that's very helpful. And can you give us an idea of what you currently do or might have plans to do in respect of cross-border, and the extent to which that is, that's a key part of what your customers want?
Yeah, so we're very much focused on things like, international remittance. So we do work with Crown Agents Bank, who I know you're very familiar with. So we, their business is about getting funds into, difficult places in emerging markets. So what we realized was a combination of them and us. The technology exists for a donor in New York to send funds to a named individual in Africa and receive confirmation back that actually that recipient received those funds on this date in this location, and it's verifiable by biometric proof and proof of life. And, those reports can go back to the donor. So it's kind of, it introduces a really interesting concept in financial inclusion terms, that we're actually sending money to named individuals and getting evidence back that it's been done. So we're very focused on that part of the ecosystem. And we're also exploring with some of those folks that do international remittance. It's what we call our B-end provider strategy. So we're all very familiar with, and there's been lots of investment in the A-end of remittance, the TransferWises and those kinds of people. I think there is an alternative way of addressing that. So my understanding is when they receive a payment through an app, or maybe from MasterCard or somebody, then in order to provide that, they know those funds are on the way. They haven't reached their bank account yet, but they know those funds are going to be arriving in a day or so. But in order to provide a good customer service, they have to make provision for the family member in Africa, let's say, to withdraw those funds straight away. So they're having to front run, provide that liquidity, which comes at an expense. Contrast that to sending money to a wallet system. So it's effectively like almost like a pooled account. I can look across that wallet system that's at the bank, and I can see there are hundreds and thousands and millions of dollars sitting in that pooled account waiting for those transactions to take place. So we can drive down the cost of those transactions by reducing that requirement for liquidity, by keeping the funds within the remitter's network almost. There's a way of really driving out costs, which is very interesting model that we're exploring with a number of remittance providers. And we've also built the technology, and we're currently demonstrating it between the UK and Ghana. We can create value and send it to a card in the Ghana market in 8 seconds. So that's pretty.
So Gabe, does that mean that, institutions aside, like the UN, for example, or others that you might work with, I personally might have someone who is in some fairly remote part of, let's say, sub-Saharan Africa, who has a card with Paycode, and I could, just as a private individual, send them money, and within a relatively short period of time, possibly 8 seconds, as you say, that money can be sent and then have arrived and be available for that individual to use.
Correct. There's a liquidity issue always. The digital money arrives, but there needs to be a pool of liquidity for that. Not everybody's going to draw out the money at the same time. So that's how we're able to take advantage of that liquidity pool that we naturally create by having a wallet system. So then the process for that customer is, rather than maybe traveling a long way to go to a bank and receive cash, they can actually go to a point of sale device. And as long as they're able to verify their identity, they're able to receive those funds and start using them straight away, and it helps to digitize that system. The more point of sale devices we get into that market, and we're doing a lot of work on how to bring our particular brand of offline technology down to a very, very low cost smartphone, so that there isn't an excuse, there isn't any reason why that ability to accept a digital payment can't be on every street corner, in every market, in every spaza shop all over the continent.
Yeah. So in other words, put another way, and this is my attempt to understand it, every single node on your network, whether it be my smartphone or a card or a POS device, is essentially like a bank that's active within that network and confirming that money is available. And with your pooled resources, you don't necessarily have to have the funds, as it were, fully settled. But in other words, they're authorized or cleared to be used, and settlement will happen at some future point when the whole system reconciles.
Yeah, that's right. I mean, you can look at those point of sales as an effective means of agency banking
Yeah.
in various locations, so they can do the normal sales that you would do if it's in a store, but they can also do cash outs if there's liquidity. I can go to that store and I can say I want to withdraw cash. I can go to that point of sale device and send money to another card. And we kind of turn the model on its head a little bit as well, in that we try and make the retailer part of that transaction fee. So as opposed to, having to pay for that, they lose part of the value to a scheme, we actually say, we're going to pay you a percentage of the transaction. So there might be a number of participants in that transaction, ourselves included, because we're providing software as a service. So we're sort of stepping into the ring with the bank and saying, if there are no transactions on our system, guess what? We don't get paid. So the person providing the card, typically it's the bank is providing the card because they are holding the float, and it's good for their business to have cash on their balance sheet. They might be also contributing to the cost of the point of sale device, but the transaction, because we own the entire ecosystem, we're a closed loop. We can agree what those fees are with the system owner. So if that's a donor organization, they might say, well, we don't want any fees being picked up by our donor community. We'll pay those fees. We've got other schemes where the fee schedule is dynamic. So based on how much money you've transacted in the last month will dictate the fees that you're paying for this particular transaction. And obviously it's heavily weighted towards those that can afford to pay, which is probably the way it should be.
So I guess in a way, the key question therefore is, can you give us a sense of the impact that your technology is having in respect of those communities that previously just couldn't have been connected to digital banking services?
I mean, it's incredible. We've got some videos running on our website. There was a natural disaster in Mozambique a couple of years ago, and we became involved in a particular area that didn't have any connectivity in terms of distributing funds to those people. And there's a girl, she's in a picture on my wall in front of me. She hadn't been able to receive her grant for a number of years before our solution came along. So it's very gratifying to get out there, and part of Paycode's DNA is we actually go out there into the community. We're not providing a service and asking people to come to us. Our teams go out and assist the system owner with onboarding those clients. So there are lots of great stories circulating about people that had no access to their funds, no access to pensions, no access to any sort of financial inclusion. And we come along with a low-cost smart card. They don't have smartphones, they don't have networks, and we're able to let them participate in all of those financial products. And other partners come to the table and provide microloans and insurance and all sorts of things. And it creates that ecosystem that hopefully will be there long after a donor intervention has gone.
So what does the future look like for your service and the impact it has? I mean, here we are now, and you have been around for a few years, and you've got a fair amount of maturity with certain clients. But let's imagine, say, Mozambique or Zambia or those communities where you're active. What will they look like in terms of their banking activity, let's say in 5 years' time?
Yeah, so we have been around. We've currently got about 5.5 million card holders in 8 different countries, with projects that we currently have contracted and are in the process of rolling out. That'll be 10 million cards by the end of next year. So the growth trajectory is actually quite high. We're finding increasingly there's interest in what we're doing. There's interest in how to do offline transactions in difficult areas. We've had some fascinating discussions with, I mentioned CBDCs. Almost all of those are looking for ways to do financial inclusion. Nobody wants to introduce a digital currency that further marginalizes those on the edge.
Yeah.
So we find ourselves in lots of interesting conversations around how that technology can be deployed. And also because we're a wallet system, we can deal with the cryptocurrencies and just give them a another wallet, if you like. So we're increasingly seeing identity as an intrinsic part of digital payments. I think it's very hard to separate the two.
Mm-hmm.
And we've been working with MasterCard over the last, I guess, 12 months since we completed the Start Path program. They have some very interesting ideas about how to roll out additional products. It's not about transactions with the group that we're working with called Community Pass. It's about how can we bring identity to communities? How can we bring applications that manage health, applications that manage farmer inputs? So we're able to, the first part that we've implemented, and there's a proof of concept going on today in Zambia, where we're demonstrating our technology together with the technology that MasterCard have brought to the table to use face biometrics and use palm biometrics to onboard and pay people in remote locations. So it's very exciting that, companies like MasterCard, as well as trying to broaden financial inclusion, are also thinking about identity and some other applications that they can also foster, which communities need to bring them together and improve their lives.
Fantastic, and nice of you to talk positively about MasterCard. So I should also say, can you just talk a little bit about how you're working with Crown Agents Bank as well?
Yeah, so Crown Agents Bank, we work with them quite often. They're doing the FX piece on the donor part of the organization. So we work with them, they come across areas of the world that maybe there isn't a good solution for payment distribution. So we work with them and put together proposals and go out into, they introduce us to potential opportunities where they want to do the FX piece, but there isn't a natural solution for the rest of the ecosystem. So we work together on projects like that.
So am I right in understanding that you're primarily focused within Africa at the moment, or do you have activities elsewhere around the world?
We do. They're very nascent activities. We just signed our first value-added reseller in the Dominican Republic. But we recognize that in both South America and in other parts of Asia, there are similar demographics to the clients that we've traditionally worked with in Africa. So, we're currently in fundraising mode at the moment. Am I allowed to mention that? And we are trying to, we're looking at how we expand across the entire market. We feel like our technology is mature. We've been doing these kinds of offline digital transactions for 10 years. So we are mature enough to say to people, this solution works. We've done various things over the years, and I mentioned some about driving down the cost of the point of sale device to put it on a smartphone and use facial biometrics and things like that to be able to reduce cost. But we're saying this product works and we want to do it in multiple locations. So we have an office now in Sydney, Australia, and we're working. Some of my team have just come back in the last few days from a visit to Dubai and to Singapore. So we're starting to spread our wings a little bit and say, this product, we've proven it works in Africa, but we believe it also works in other similar territories.
Although you're active within the developing world where there is an absence of infrastructure, you may find that it's not about the developing world or developed world. It's just about the absence of infrastructure. So your solution could have an application within environments where you would expect there to already be fairly well developed infrastructure, but there might not be, in remote parts of Northern Europe, let's say, or Northern Canada, or where the internet does not go.
Yeah, we've certainly had those discussions, and it's surprising when you dig into the subject of financial inclusion, the number of people in developed markets that also don't participate for whatever reason, and then there's, sadly, at this moment in time, with displacement through wars and conflict, there's also a requirement for quickly being able to provide somebody with an identity and a means by which you can transfer value to them, that they can, make the best of a difficult situation. So the technology's got uses across the board, and interestingly, even in the developed world, this idea that if we're going to move to a digital currency of some kind, then that also needs to be available 24/7. It needs to be available offline. Nobody wants to rely on a digital currency that always has to be online. If there's a storm, a bad patch on a network, there's all sorts of reasons why we really can't afford to risk all our currency, all our transactions to have to be online all the time. So we've had some very interesting discussions with providers in the developed world about how that might work also.
Great. Well, Gabe Ruhan, CEO of Paycode, thank you very much for talking to us about your business and about how it impacts on financial inclusion, on cross-border, and a range of other things as well. Absolutely fascinating, and thank you very much.
It's been an absolute pleasure. Thank you for the time.